Good day, guys. My name is Vectors, and on today's lesson, I'm going to be explaining top-down analysis. It's also known as directional bias, knowing your trend, where the price is coming from, where it's going to, and how you can follow the trend. So, first of all, my name is Vectors, and I trade synthetic indices. I am a forex trader. Alright, and if you want to learn more about forex trading, do well to join my Telegram channel. The link is on my channel description, and I'll try my best to put the link in this video description. Okay, so today I'm going to be talking about top-down analysis, and like I'm going to be teaching the top-down analysis irrespective to the advanced market structure. A lot of things that people don't understand is that directional bias is what is going to make you a profitable trader, make you to know what you're doing and trade with confidence. Because over time, I've seen a lot of people, they are buying a pair, let's say you're trading gold, you're buying gold, you are selling gold at the same time. Okay. What people fail to understand is that sell to buy to sell is not going to help them, because sometimes the sell will hold perfectly, but the buy will turn around along the line, and it will just saying that market has manipulated you. But in a real sense, it is not market manipulation, it's just directional bias. Okay, one thing with top down analysis is that once you go to your higher time frame to see where the price is coming from, let's say from the weekly time frame, you know that based on the strategy you trade, it could be SMC, it could be support and resistance, it could be algo market structure, it could be advanced market structure. Okay, if you notice that the price is bearish on the weekly time frame and it has not smashed the target, okay, you don't have to set that pair if you know that it's bearing, is bullish on the weekly time frame. And if you know that it's bearish, okay, you have to look out for sell on the 24-hour time frame, on the 4-hour time frame, and scale down to your lower time frame to find your entry until that target has been taken out on the weekly time frame. That is what is going to help you with this concept of top down analysis, and that is what a lot of people don't understand. Okay, so today I'm going to be breaking down what top down analysis really is, and I believe I'll just explain what top down analysis is, and also I'm going to be showing you how you can use top down analysis, okay, with the advanced market structure. So if you are doing this video for the first time, I've already dropped video about market structure. Okay, go and watch the video. I dropped video about liquidity. I've also dropped video about POI. I've dropped video about supply and demand. I've dropped video about confirmation entry. And today I want to do this top down analysis, and that is a complete course for you. If you can be able to study these videos I've made in the past up to this top down analysis, take your time to read, practice it on the chart, you see that you are going to get a clearer understanding of everything. And if you implement this, you are going to make a whole lot of results with your trading system. So without much talk, I want us to go directly into this topic for today. All right, so let's let me add some bets to my watch list, and then let's just go straight to the point. Okay, all right. So the first we are going to be treating today is V50. Okay, let's do analysis on V50. All right, let's do top down analysis on V50. Okay, now if you notice one thing with V50, okay, you notice one thing with V50, you see that you go to your higher time frame. Okay, the most important thing is you are going to go to your higher time frame. Now I will focus on this part. Okay, I'll focus on this. I'll focus on this part. This part, just this zone. Let's focus on this zone. Okay, because it has played well according to the top down analysis. Okay, it has played out so good. And now let's just stick to this part. Let me explain what top down analysis is for you. Okay, so just this zone like this. If you go to your 24-hour time frame, if you don't see your setup, okay, it's okay for you to leave and go to another higher time frame. Okay, because the thing is, you can't take a trade on the higher time frame if you see your structure on the weekly time frame or on the 24-hour time frame or on the 4-hour time frame. You can't take your trade on the 4-hour time frame because you have your drawdown is going to be so high. Okay, so what I do is that if I do my top down analysis from the weekly time frame to my 24-hour time frame to my 4-hour time frame or to my 8-hour time frame, I'll go down to my 2-hour time frame if I see a structure or 1 hour time frame. Okay, and then I look out for my setup in the 30-minute time frame, 15 minutes time frame, 10 minutes time frame, almost sometimes 5 minutes time frame, and I'm going to be having a good entry and maximize my profit. Okay, so right now, let's say you see a setup on the 4-hour time frame, you don't have to jump into that trade. Okay, you have to scale down to your lower time frame because that is when you see your perfect entry. Okay, so on this pair, right, this zone like this, you go see, let's go down to the 4-hour time frame. Or rather say, let's use the 8-hour time frame. Okay, you go see from this 8-hour time frame, right, from this 8-hour time frame, from the rules of the advanced market structure, that is why I will always redirect you back to the previous video, because if you don't watch my previous video, you're not going to understand this rules of the advanced market structure. It's something I've already explained there in detail. So I will advise you to go and watch those videos. It's going to really, really help you. Okay. So on the 8-hour time frame, we can see our structure. Okay. You can see our structure on this 8-hour time frame. So what do we do next? Okay. What we'll do next is we'll get down to the 30 minutes time frame. Sorry, the 8-hour time frame. Okay. First of all, what do we see? We see, see our strip of liquidity here. Okay, what else? See our protected high here. This is the higher time frame. Alright. So whatever market you trade, be it synthetic, be it crypto, okay, this top down analysis approach, if you apply it to them, it all work. Okay. Now this is a this is our sweep of our structural liquidity. The distance from this protected high, alright, this liquidity must be up to 50%. And how do you get it? Using your Fibonacci tools. Okay, so you place this above this up here. Okay, let me set something. Let me do something real quick. You can see that it is up to 50%, 0.5%. Also means 50%. Okay, so the whole of this place is your POI. The whole of this place is your POI. You could see that price tap into this POI and then start going in your direction. Right? Start going in your direction. The target is here. The target is here. So one thing you need to know is using the 4-hour time frame, the higher time frame, you don't have to look for your out for your supply and demand, your POI, because this is higher time frame. And if you get that, you are going the noise is going to be so much and you're going to get so much confused when you want to look for your supply and demand in your in your higher time frame, like 8 hour, 4 hour, 2 hour, 24 hour. It's not advisable. So once you see your structure, okay, first of all, you might see it like this coming down. target. So what do you do? Since you know where price is coming from on the 8 hour time frame, okay, first of all you check for weekly time frame, you don't see any structure. You check for 24 hour, you don't see any structure. You check for 8 hours, you don't see any structure, and then you check for 4 hour, you then finally see a structure, okay, and then you know where it's going to. Let's say the overall trend is bullish or bearish, and then you now see a structure on the higher time frame that is also bearish. Okay, what you have to do now is go down to your 15 minutes time frame. Once you go down to your 15 minutes time frame, you can begin to look out for this same structure in the lower time frame. In that time frame, you can be able to see your 5 minutes supply and demand, your 5 minutes supply. Remember, if a pair is selling on the higher time frame, all you have to do is to stick to the sell until the target is taken out on the higher time frame. If the sell is selling on the forward time frame, don't look for buy, look for sell until that target is completed. That is why they say directional buyers trade with a trend. Okay, that is how it works. Okay, so now what do we do now? Since we know where our price is coming from, remember this is an example. Okay, once you know that where this our price is coming from, what do? We look out for our go to our 15 minutes time frame and start looking for sell structure. This thing is structure on the 15 minutes time frame. So let's do that real quick. Just pray we can be able to get to this data because it's been long. It's really been long. Okay, good, good. Now this is our 15 minutes time frame. Alright. This is our 15 minutes time frame. The problem now is if we scale down to the 5 minutes time frame, we might not be able to get to this data again because it's been so long. It's been so long. Okay, what we'll do is that this was a price action that has played out for a long time. So I'm going to use another pair as an example. Okay, the one that is currently trending, the pair that is currently trending. I will look for that and then use it as an example. Okay, let's use V100s. So if you come to 24 hour on V100s, okay, from the rules of the advanced market structure, we haven't seen anything. Okay, we haven't seen anything. We are doing top down analysis now. We have not seen anything. So what else do we do? We go to the 8 hour time frame if we see something. Okay, still yet we have not seen anything. Okay, we've seen a sweep, we've seen a protected high, but we have not seen a valid structural liquidity. So what do? We ignore that one. Alright, and then we'll move forward to another. Okay, so we'll go down to the 2 hour time frame. Remember, if you don't see your structure on the 1 minute, sorry, on the weekly time frame, you go to 24 hour. If you don't see it on the 24 hour, you go to the 8 hour. If you don't see it on the 8 hour, you go to uh because your higher time frame structure that you are going to be using, they are your weekly, your daily, your 8 hour, your 4 hour, your 2 hour, and your 1 hour, and also 30 minutes. Where you start looking for entry is your 15 minutes, 10 minutes, and 5 minutes. Okay, so now what do we see? This is a higher time frame structure. Okay, you can see that we have our sweep of liquidity here. All right, We have our sweep of liquidity here, and then we have our protected high at this point. And then we have our structural liquidity here. Make sure the structural liquidity is always up to 50%. So let's mark it with a Fibonacci. See, it's 50%, which means it's valid. Alright. Then this is our POI, the other time frame. And then this is where price is coming to. This is our target. This is our target. Okay. This exactly here is our target. So what do we do? Since you know that price is going to come and take out this low, okay, this is the starting point and this is the finish point, right? Now what do we do next? What do we do next? We go to the 15 minutes time frame to start looking for our structure. Okay, you could see that there are a lot of structure that has already played out uh in this V100 already. Okay, so let's begin from uh the POI. Okay, now we can see our structure. You can see a buy structure at this point, right? Sell structure, sorry. We have our protected high here. We have our sweep of liquidity here. We have our structural liquidity at this point. Okay, now let's go down to the 5 minutes time frame and let's see if we are going to have a valid supply. Once we have a valid supply at that point, then you know that okay, the structure is valid, and then we can be able to take our our buy from there, our sell from there. Sorry. And what do we have here? We have our valid supply level that is yet to be unmitigated. The green candle in your POI is your valid supply level. So what are we going to do? We're going to mark it. We're going to mark it. So what price will do? Price will come back into this zone, confirmation, and then sell off. I told you about confirmation entry. So when you want to say, look out for your bearish engulfing candle, your sell candle, okay, your sell confirmation candle, and this is the confirmation candle here. This green candle was engulfed by this red candle, and that is what made it to sell. And what did it do? It sold down to the target. It sold down to the 15 minutes, wow, another 2 hour here. So keep looking for sales like this. Keep looking for sales like this until the price matches the 2 hour time frame target, which is your higher time frame, and then you stop looking for sale and wait for price to give you another higher time frame structure, and you start doing the same thing over and over again. Let's say you took this sale, alright, this one already play out. Okay, here's the next one. This one already play out. Okay, now you come here again, you see another structure. This is how top the analysis work, and this is what is going to make you money from the market if you understand this directional bias. Okay, now this is another sweep of liquidity. This is structural liquidity right here. This is protected high right here, and this is your valid supply candle. And what the price do? Let's come here, give your confirmation. This is a clear confirmation here, and it sold to TP, which is your target. Okay, price sold to your target. You can see it clearly. You can see it clearly. So your risk to reward is 1 to 4 RR. Okay, so this is it. This is how you be catching sell until if you notice very well, you see that the buys are not holding, but the sells is holding. Why? Because of top down analysis. So after you took this sell, all right, let me let me put everything back together. Remember, we have one sell here. We have another sell which smashes target here. And look at again. Here is another sell. Okay. So once you know where the price is going to and where it's coming from, you begin to catch sales. Okay. First of all, this is our sweep of liquidity. It's another sweep of liquidity. This is your protected high. This is your structural liquidity. Do we have a valid demand supply candle here? Yes, we have a valid supply candle here. And what did price do? Price came into this zone, give you your confirmation candle. This is your confirmation candle. This right here is your confirmation candle for the sale. Okay, and what happened? This is the target, and price smashes this target. Easy peasy. This is it. Alright. And then you can keep looking. If you keep looking, you see more setup. This is another setup here, which is yet to play out. So price is going to definitely come to this zone or this zone here, and then uh, sell from there. So let us mark it down. Remember, price doesn't have to come to all your setup. Sometimes it will come, sometimes it will not come. So all you have to do is be looking out for entries in your lower time frame and study confirmation candle. Alright. So this is what is going to happen here. That is if price comes to the zone. Alright. And you can see we have another markup here. Alright. We have another setup at this point. We have our protected high here. We have our sweep of liquidity. We have our structural liquidity, and we have our supply here. We have another supply here. Okay, and this is the target. The target is here. If price sell from here, fine. If you give confirmation here, we will enter the sale. If you give confirmation here, we enter the sale. So that is what you are going to be doing until price come, because price is already selling from here. Right. So that is what you're going to be looking out for sales on the on the lower time frame until price come and take out this target. Until price come and take out this target. That is what you are going to be doing. That is what they call directional bias, top down analysis. It helps you to know where the price is coming from and where it's going to. So the same thing you do for a buy is the same thing you're going to be doing for a sell. Okay. So if you are buying, this is what you are going to be doing. You're looking out for this uh, those your buys on the lower time frame. Just know where the price is coming from the higher time frame, and then start looking out for your entries on the lower time frame. Alright, so this is what you need to understand about directional bias, and I'm going to be making more videos about this top down analysis so that you get more clarity on directional bias. Okay, if you watch this video to this point, don't forget to subscribe. Very important. Subscribe as you have gotten values, and also don't forget to like, share, and ask your question in the comment section, something that is confusing you and what you want me to make video about next. And I'm going to see you in my next video. Okay, I'm going to see you in my next video. And if you want to learn how to trade forex, synthetic indices to be precise, or any market you want to trade at all, be it crypto, gold, currency pairs, Don't forget to join my Telegram channel. The link is in my description. And peace out. All right. See you on the next one.